Welcome to The Explainer. Today, we're going to tackle one of the biggest, most fundamental concepts in personal finance, the difference between saving and investing. Look, getting this wrong can seriously set you back, but getting it right, well, that's the very first step to building real, lasting wealth.
All right, let's just dive right in. Saving, investing. These sound kind of the same, don't they? You're just putting money away for later. But what if I told you that thinking they're the same thing is one of the biggest roadblocks standing between you and your financial goals? And it's a huge mistake, a costly one. Confusing these two is like trying to use a hammer to drive in a screw. Yeah, you might get it in there eventually, but it's going to be messy, and you've definitely used the wrong tool for the job. Getting this distinction right is the absolute bedrock of a solid financial future.
So here's how we're going to break it all down. First, we'll start with the big question. Then we'll get into what saving really is, and then what investing is for. We'll compare them side by side, and then we'll show you how to put them together in a powerful strategy we're calling your wealth architecture. And of course, we'll wrap up with the key stuff you need to know. Really, it all comes down to this one question, doesn't it? And to answer it, we're going to use a really powerful metaphor today. Think of your finances like you're constructing a building, a complete wealth architecture that you design and build piece by piece. So every great building, every skyscraper starts with a solid foundation. In your financial life, that foundation is saving. Now I know, it's not the flashy part, it's not the penthouse suite, but without it, the whole structure is at risk of crumbling at the first sign of trouble. So what is saving exactly? At its heart, it's all about two things: security and accessibility. This is the money you're putting aside in a super safe, easy-to-reach place for specific things you'll need in the near future. And what are those things? Well, first and foremost, your emergency fund. This is your non-negotiable safety net for when life happens. It's also for those big purchases you're planning soon: a car, a vacation, a down payment. The two keywords here are liquidity, meaning you can get your hands on that cash fast, and low risk. The whole point isn't to make this money grow. It's to make sure it is right there, 100% there, when you need it. Okay, foundation's poured. It's solid. Now it's time to build the skyscraper. If savings is that strong foundation, investing is the part of your architecture that's designed to reach for the sky. This is your growth engine. So what's investing then? It's putting your money to work. You're using it to buy assets, things like stocks, bonds, maybe real estate, that have the potential to grow in value over a long period of time. And here's the crucial part. The goal is to grow your money faster than inflation, which is that silent thief that's always eating away at the purchasing power of your cash. Investing is for the big stuff, the long-term goals, like retirement. This is how you make your money start working for you instead of you always working for it. But, and this is a big but, this brings us to a critical point. Unlike saving, investing always involves risk. You're making a trade. You're giving up short-term safety for the potential of much, much higher returns down the road. Now, this is where it gets really powerful. Just look at this chart. That first bar shows $10,000 in a typical savings account over 30 years. It barely budges. Now look at the second bar. When you factor in inflation, that same 10 grand is actually worth less than when you started. It lost a huge chunk of its buying power. But then, look at that third bar. That same $10,000 invested in the market has the potential to grow into a massive sum. This visualizes perfectly why investing isn't really optional if you want to build long-term wealth. Okay, so we've established we have two very different tools for two very different jobs. Let's just put them right next to each other to make this crystal clear. Over here on the left, we have saving. The goal? Preservation. Keep your money safe and easy to grab for short-term needs. That means low risk and, low return. Over on the right, investing. The goal here is pure growth. You're willing to take on more risk over a longer period of time for the potential of much bigger returns. See, you wouldn't use your retirement fund to fix your car, and you wouldn't use your emergency savings to gamble on a new stock. Different tools, different jobs. And that brings us to what might be the single most important takeaway from this entire explainer. The big secret is that this isn't a debate. It's not about which one is better. It's never, ever saving or investing. The key to a strong financial life is saving and investing. This quote from the source material just says it all, doesn't it? Saving is the foundation. Investing is the skyscraper. You just can't build a massive, impressive skyscraper on a weak foundation, or worse, no foundation at all. And what good is a rock-solid foundation if you never build anything on top of it? You absolutely need both, working together to create that lasting structure. So, what's the game plan? What does this look like in the real world? It's actually a pretty simple 3-step blueprint. Step 1, pour the concrete. Build that unshakable foundation with an emergency fund in a high-yield savings account. Once that's done and you're secure, step 2, design your skyscraper. What are you building for? What are those big long-term goals? Then, and only then, do you move to step 3, start construction. Begin investing consistently and automatically toward those goals.
All right, let's bring this all home. We've talked about foundations, we've talked about skyscrapers. So, what are the absolute key things you need to walk away with for your own financial future?
Just remember this: saving is your defense. It's for safety, for emergencies, for those short-term goals. Investing is your offense. That's for growth, for beating inflation, for building real wealth over time. They're not enemies, they're partners in your financial plan. And the golden rule is you always build that solid savings foundation first before you start building up. At the end of the day, the blueprint for your financial life is yours, and yours alone to draw up. You now have the tools, you have the concepts, so the only real question left is, what kind of amazing, lasting structure are you going to build?